Hello everyone, welcome to the market opening bell on Tuesday, September 16th, your 10-minute guide to the stock market. Last month's three-horse carriage data in mainland China all fell short of expectations, but Hong Kong stocks rebounded and performed well, driven by Alibaba and auto stocks. The Hang Seng Index opened 79 points lower, but then rose, reaching a high of 144 points up at 26,532 points. It closed up 58 points or 0.2% at 26,446 points. The H-share index rose 19 points or 0.2% to 9,384 points. The Hang Seng Tech Index rose 54 points or 0.9% to 6,043 points. Total market turnover for the day was 290.1 billion Hong Kong dollars. Southbound funds net bought 14.473 billion Hong Kong dollars worth of Hong Kong stocks. Among them, net buys include Alibaba 5.285 billion, Tracker Fund 2.782 billion, Meituan 672 million, Hua Hong Semiconductor 330 million, Brain Aura Medical Technology 266 million, SMIC 118 million, Transthera Sciences 142 million, BZ Health 111 million. Net sales include Xiaomi 718 million, PopMart 452 million, Akasol 229 million, Tencent 194 million. According to statistics, southbound funds have net bought Alibaba for 17 consecutive days, totaling $46.808 billion. Net bought SMIC for 5 consecutive days, totaling $1.778 billion. Technically, the Hang Seng Index is consolidating around the 26,500 level, preparing to challenge the 26,800 target, with the next target at 27,100. On the Asia side, the Shanghai Composite Index rose first, then fell, while the Chinex Index gains narrowed slightly in the afternoon. The Shanghai Composite closed at 3,860 points, down 10 points or 0.3%. The Shenzhen Component Index closed at 13,005 points, up 81 points or 0.6%. The Chinex Index closed at 3,066 points, up 45 points or 1.5%. Combined turnover in Shanghai and Shenzhen was 2.2762 trillion yuan. The renminbi-US dollar central parity rate was lower by 37 points to 7.1056. China's three-horse carriage economic data all fell short of expectations. Among them, value-added industrial output for enterprises above designated size in August grew 5.2% year-on-year, below the expected 5.6%. Total retail sales of consumer goods grew 3.4% year-on-year, below the expected 3.8%. Urban fixed asset investment in the first 8 months grew 0.5% year-on-year, below the expected 1.5%. Real estate development investment during the period fell 12.9% year-on-year, worse than the expected 12.5% drop, among which residential investment fell 11.9%. The urban surveyed unemployment rate in August was 5.3% compared to the expected and previous value of 5.2%. The National Development and Reform Commission and the National Energy Administration issued the Special Action Plan for large-scale construction of new energy storage 2025 to 2027. According to the plan, from 2025 to 2027, 100 gigawatt of new energy storage capacity will be added, equivalent to 300 gigawatt hour, with the goal of exceeding 180 million kilowatt installed capacity by 2027, expected to drive direct investment of about 250 billion yuan. New energy storage technology routes will still be dominated by lithium-ion battery storage, with various technology routes and application scenarios further enriched, cultivating a batch of pilot application projects and creating a number of typical application scenarios. CATL, as the global leader in electric vehicle and energy storage battery manufacturing is expected to accelerate its profit growth this year to 37% year-on-year, with its stock price rising 7.4% to close at $465. CLB, as the world's fourth largest electric vehicle and energy storage battery manufacturer, is expected to have a compound annual growth rate of 26% in profits from 2025 to 2027. As for wrapped petrol, the world's fifth largest energy storage battery manufacturer, it is currently on the recovery track. Additionally, over the weekend, there was news that CATL has revised its 2026 production scheduling guidance to suppliers upward to 1.1 TWh, corresponding to over 50% growth, greatly exceeding market expectations. Industry insiders pointed out that this move directly confirms and significantly strengthens the market's optimistic expectations for future demand. This exceeding expectation guidance means that the certainty of high growth in lithium battery demand in 2026 has greatly increased, and the supply-demand turning point for key materials segments in the industry chain, such as lithium hexafluorophosphate, is expected to arrive earlier. The reasons for the upward revision in scheduling are estimated to be: 1. Demand exceeding expectations, sustained high prosperity, with 2025 scheduled production at 720 to 730 gigawatt-hour and actual 2026 scheduled production of 900 to 950 gigawatt-hour, a 30% increase. 2. Slowdown in capital expenditure in the supply chain for 2024 to 2025, needing to guide the supply chain to continue expanding production to meet 2026 to 2027 demand and avoid material shortages. There is also news about CATL. Its sodium-ion battery has passed the new national standard certification, becoming the world's first sodium-ion battery to pass the new national standard certification. Currently, the company's sodium-ion passenger vehicle power battery is advancing development and implementation with customers, progressing smoothly. It's understood that the sodium-ion passenger vehicle power battery has excellent low-temperature energy retention rate and safety performance. Speaking of lithium batteries, statistical data shows that in August 2025, domestic lithium carbonate total demand reached 102,000 tons, up 7.49% month-on-month, setting a new historical high. Although lithium carbonate inventory is still above 140,000 tons, the available days have continued to decline over the past 6 months, with price elasticity strengthening accordingly. From specific demand, lithium iron phosphate demand for lithium carbonate increased 8% month-on-month, with obvious pull from energy storage. And energy storage demand growth in 2026 is conservatively estimated at 40% to 50%. Lithium stocks Ganfeng and Tianqi rose over 2%. Auto stocks rose unaffected by reports of Mexico imposing a 50% tariff on Chinese-made cars. BYD and Tesla would be the biggest losers, while benefiting U.S. traditional big three automakers Ford, General Motors, and Stellantis. The U.S. big three are exempt due to existing trade agreements. In addition, the country allows manufacturers with production plants in Mexico to import a specified quota of vehicles duty-free from countries without trade agreements. The US Big Three all have plants in Mexico, but BYD and Tesla do not. China has initiated an anti-dumping investigation into certain analog chips originating from US imports. Chip stocks SMIC and Huahong rose 0.4% and 2.5%. Hesai Technology, which will start trading today, closed at 228.2 Hong Kong dollars in yesterday's grey market trading session on Phillip Mart, up 7.2% or 15.4 Hong Kong dollars from the IPO price. Excluding fees per lot of 20 shares, the book profit is 308 Hong Kong dollars. Hesai Technology announced further deepening cooperation with a leading U.S. robo-taxi company, signing a LiDAR order worth over 40 million US dollars. Hesai will serve as its sole LiDAR supplier, providing long-range and short-range LiDAR products, with the order planned to be delivered by the end of 2026. Senior officials from China and the US discussed tariff rates and the deadline for selling social media TikTok for the second consecutive day. US President Trump said on Monday that US-China trade talks have made positive progress and hinted at reaching an agreement with China on TikTok, and that he would speak with President Xi Jinping on Friday, providing positive stimulus for US stocks. The S&P 500 and Nasdaq both hit new highs, with the S&P 500 up 30 points or 0.5% to close at 6,615 points, marking the first close above 6,600. Nasdaq up 207 points or 0.9% to 22,348 points. Dow up 49 points or 0.1% to 48,883 points. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, rose 72 points or 0.9% to 8,451 points. Tesla was boosted last week by CEO Musk purchasing a total of 2.57 million shares at different prices, worth about $1 billion US dollars, driving the stock up 3.6%. Data shows that Musk rarely engages in such actions. His last stock purchase was in February 2020, when he bought about 200,000 shares worth about 10 million US dollars, believed to be his largest amount to date. China's State Administration for Market Regulation announced that after preliminary investigation, NVIDIA violated the anti-monopoly law of the People's Republic of China, and the announcement of the State Administration for Market Regulation on the anti-monopoly review decision approving NVIDIA Corporation's acquisition of Mellanox Technologies Limited equity with additional restrictive conditions. The SAMR has decided to conduct further investigation in accordance with the law, with its stock price falling first, then stabilizing, closing nearly flat. CoreWeave signed a 6.3 billion US dollar cloud computing capacity order with NVIDIA, with its stock up 7.6%. Oracle, whose stock fluctuated last week due to AI business forecasts, rose 3.4%. On the economic data front, the September New York State Manufacturing Index fell to minus 8.7, the lowest in 3 months, below the market expectation of 5, compared to 11.9 in August. Our stock pick today is MINIEYE, stock code T431. MINIEYE continues to iterate on its intelligent driving solutions, further perfecting its intelligent driving product matrix. In February of this year, the group launched the iPilot 4 Plus intelligent driving solution, built on the Horizon Journey 6M chip. It can integrate with multiple sensors such as LiDAR, enabling urban navigation assistance that covers full scenarios across urban areas, highways, and parking lots, along with valet parking functions from parking space to parking space. Relying on end-to-end algorithms, it further optimizes decision-making efficiency and generalization capabilities in complex scenarios. In June of this year, the group launched the higher performance iPilot 4 Pro intelligent driving solution, which is developed based on a chip solution with 256 TOPS of higher computing power. It not only provides a more intelligent and comfortable urban navigation experience, but also achieves breakthroughs in complex scenario decision making, extreme weather handling, and coping with complex intersections, effectively expanding the adaptation range for urban scenarios and improving traffic efficiency and avoidance response speed. The iPilot 4 Pro has secured platform type project designations from vehicle manufacturers and is expected to enter mass production in the first half of 2026. The group continues to build a progressive intelligent driving business layout from L0 to L4 levels and achieve breakthrough progress in its L4 autonomous driving business, iRobo, during the first half of this year. Among these, the L4 unmanned minibus business took the lead in achieving a breakthrough, completing commercial deployment in Suzhou in February. This milestone signifies that the group's L4 autonomous driving technology has gained market validation and has officially become a new business growth point. Subsequently, the unmanned minibus business accelerated its expansion with operations landing in multiple provinces and cities across the country, including Heilongjiang, Shanghai, and Hangzhou, cumulatively securing over 10 projects. At the same time, the group has keenly captured opportunities in new scenarios since this year, driven by the dual forces of local government policy support and an influx of industrial capital. Unmanned logistics and other cargo carrying scenarios have ushered in a period of commercial explosion. Leveraging its first-mover advantage in L4 autonomous driving technology, the group has focused on technical research and product development in unmanned logistics and other cargo carrying scenarios, while actively exploring commercialization opportunities in the intelligent cockpit business area. The group consistently focuses on iterating product functions and optimizing integration, committed to providing customers with more intelligent and cost-effective solutions. The group continues to expand its customer cooperation ecosystem, building on close partnerships with multiple vehicle manufacturers and Tier 1 suppliers to further broaden customer coverage, showing a trend of extending from domestic independent plants to joint venture vehicle manufacturers. As of June 30, 2025, it has cumulatively provided mass production for 42 automotive original equipment manufacturers, vehicle manufacturers, and added 18 new project designations from vehicle manufacturers and Tier 1 suppliers in the first half of this year. Designated vehicle model platforms are typically used to manufacture a series of models that share similar components, systems, and functions, differing from single model designations, which can correspond to higher expected mass production scales and reduce the associated costs of developing and customizing solutions for each model. Therefore, the group can deliver solutions more quickly and effectively through standardized development processes, achieving start of production SOP for more models and thereby improving operational efficiency. Suggested buy price 25 Hong Kong dollars, target 27.50, stop loss $23.7. I do not hold the aforementioned stock.